still struggling with structure, then read every move from swing and internal structure as I walk through this today to share with you how you can use this to find great trade setups. Now I'm going to walk through the pound US dollar. I'm going to walk through the structure of using smart money structure, how I teach it in this channel for your foundation in trading. And then we'll walk through as we go down through the time frames to show you how to read that internal and swing structure to help you to find those trades. Now, if you're still struggling at the end of this video, then do check out the 90-day profit trading system. That will go into everything in much more depth to teach you how to read this step by step. You can check that out. The link is in the description of this video. So we're going to start on the daily time frame. I will briefly go through how we read this structure, and then we'll proceed going through how we look at the internal structures as well as we drop through those lower time frames. So the first thing we're going to do is find this highest point in the market. I'm going to mark this off, and I'll mark this off as a break of structure, and I'll explain why it's a break of structure. And we'll go into the candles closely. So reading a break of structure, a true breakout is only when you see a candle close. So let me mark it off. This candle here is the candle that closes through this previous level. We close through. The one before is just a candle wick. We're not going to use that as a valid break of structure, and you'll see how this works in a 4-hour chart as we go on in this video. So when we see this as a valid break of structure, we can now find what we call a valid low in the market. And the way we do this, we look back from our price. We're looking for the first time we see a candle close down. That is our first candle that closes down, and it closes below the previous candle's low. It must be the previous candle. So if this candle closed down below this low, that would be our last close down. This happens to be the last candle closing down. Once we have this, you can mark off your valid low is the lowest point here in the market. So you're looking at price coming back towards this area to an area of demand, or to take this low for potential entry. Now, I'm not going to go into entries at this area or understanding supply and demand at this point, because it's not really understanding that, it's understanding reading your structure. So once you have this in mind, you know where price is broken out. What's the next step? We need to find a valid high for the daily to see the start of a swing pullback. How do we look for that? Well, we need to see the same thing, a candle closing down, just like this candle. So we're going to go step by step now through this video to show you how to do this. So let's go candle by candle approach. So we continue to be bullish. Now we've got to close down. That gives me a valid high. We mark that off from the highest point. So now we have what we call our trading range on a daily, from this low to this high. And that's what you're looking for price to pull back into. But that doesn't mean we can't look to sell at this point, because we're basically looking for price to pull back on a counter trend trade mode. So the way we do this is we go down to lower time frames. And that's where you're going to use and understand not just internal structures, but also multiple time frames here. So you've got a double whammy in this video today to teach you the clarity you need with reading your structure. Now, don't forget, if you do still find this complex, reach out to me, drop a comment below. I answer every question regarding structure. So let's go to the 4-hour time frame, and I'll show you now reading the 4-hour structure. This is our daily move, so we can mark this off. Let's mark this off as a daily low here in the market. So we're going to mark this off. Let me just mark this as a daily. It's on a daily as well. So we mark this off as a thicker line. Whoops, that one. So that's our daily current low. So that's where we're looking for price to come into this area. We have a last sell to buy move here as well on a 4-hour. Now, when we're looking at a 4-hour time frame, we can mark this off as a 4-hour potential break of structure. So we'll mark this off as a 4-hour BOS. Why? Because we see a valid closed through. That's my valid low. We push up. There's a pullback on that candle. So we can mark off a new high, a valid high, just like we did on the daily a minute ago. Now we see a new valid break to the upside. What can we mark off here? Is a valid low on a 4-hour. So what I'm going to do is mark this off as a valid low here right now. Let's mark this off so it's on all time frames. So what we're looking for is price to close through to show me a shift in structure. And it's also going to validate this move to the downside for our daily time frame where we're seeing that pullback. On the daily, we've basically created that valid high. But to confirm this, we want to see a pullback. Now we can do that already by understanding internal structure. So when we see this candle pulling back, and I'll mark it off with an arrow, we can mark off a valid high. What I'm going to do, I'm going to use the magnet so I can make sure this is correct. And you can see we don't close that high, we just close at the high. So this is a liquidity sweep in the market. So what was happened here is took some liquidity and then we've seen the drop away to downside. Now that's a different concept completely, understanding liquidity. But what I see here is a perfect opportunity to look for sells from this point afterwards, because we made that sweep and started to drop lower. Now on an internal structure, we had a breakout right there. So the market made a pullback on that bullish candle and there's a break to downside. So internally, we can see price potentially want to come back up to here to continue down. Let's just follow price from this point. We'll mark this off anyway as an internal break of structure, and we'll make this as a dashed line. Let's just follow the market from this point. We'll play this at a speed. What potentially we're looking for is a close of this low for a valid break of structure. And at the moment, we're just seeing the wick through. Remember what I said earlier on? A wick through is not a valid break of structure. Yes, this is a valid break of structure, internal structure, but not a valid swing structure, because our swing move is from here to here on the 4 hour. This is just a liquidity sweep. Now, if we see a breakout to the downside, that shifts this structure bearish. That's what we're looking for. Now, on an internal structure, we can see that on that move there. So let's just go forward with the candles. I'm looking for that breakout. Right, so right there, that candle is validation of a break of structure. Forget the wicks. Imagine those wicks are not there, and all you're seeing is the open close price of those candles. That is the close price. It closes through our level. Now we have a bearish bias. That's reading the structure, giving you that clarity that the market is going to continue bearish at the point. So if we now go back, and what I'm now going to do is I'm going to show you how to quickly look at marking an area of supply so you understand the concept. I'm not going to fully teach you this here, but just to show you the concept. From this high is where we break out. So what I can actually do now, I can mark this off as a valid high on a 4 hour time frame. So we mark that off as a 4 hour valid high, and we'll have that just on this current time frame. So when I see this, I also get a close up on that candle. So I've got this as a close up. Now the reason this is a valid high, which I didn't really clarify, when we go bearish instead of bullish, we were looking for the close down for a bearish, for a bullish move, for a bearish candle closing down. For a bearish move, we look for the candle to close up. So here is the last candle that closed up, which created the valid high. I didn't really cover that, so I've just now shown you exactly why I marked that level off. Now we can also mark off the low. So what I'm going to do, I'm just going to copy this level. That becomes a valid low in the market. So now we can mark off a valid area of supply. Now I like to mark off a full zone from the low to the high. I'm just going to show you this so you can see the way we look at the markets. I'll mark this across. So anywhere within this zone, and there's ways I'm going to look for trades here. I'm not going into that detail today, but I'm just showing you there's ways I can look for sells inside this zone to run down, take this low, and can continue down as well. And that's what we're going to go through, understanding internal structure here as we go lower. So let's go forward a few more candles. I'm just looking for an internal structure shift. So what I've got is an internal high being created. So I'm going to mark this off as a dashed line so you can see the difference. Just like we saw here, okay, we could actually use this, and I'm going to mark this off as an internal low. Let's grab that level. Now it's an internal level because we see the close up here. Then the market makes a close down. Then I can mark this off as an internal high. We just sweep that high. Okay, a perfect area to understand, just like we saw over here as a swing area sweep. This is an internal sweep. Now, when this is an internal sweep, we failed to break it, but the market came back and it broke this last area here. because we saw the close down. We didn't validate the break, it's just a sweep. So it's like we see here. So a valid break is more this level here, but we can still follow price from this point. And what's it's creating is a liquidity area in the market. So let me just get rid of these blue handles so it doesn't make it confusing. So it's going to follow price, and you can see we wick through to show you that what happens next. And we start to make a pullback. So you can see we start making a new low in the market again. So let's just grab this level here. We can make a new low here, a validation area where price can potentially come back to and take for liquidity. Now let's move to a next lower time frame. In this case, we're going to go to a 30-minute here. So you can start reading the 30-minute time frame. And what we have is previously the market made this, let me just draw this out, as a valid high in the market. This was a valid low. That is my swing move to downside. This is then a 30-minute low, and I just marked that out to show you on a 4-hour time frame, didn't I, where that low sat. Now it becomes a valid low for a break of structure. So let me just change this to a solid line on this 30-minute time frame, and we'll mark this off. So now what we just created is a valid break of structure on a 30-minute. So once we see this, we're going to use the same concept of a structure like we were going through on a higher time frames. You can identify that this area of supply is what held price. So price came in, came back, lower high, broke out and broke that structure. So we've not just broken that area on the 4-hour internal, we broke that structure now on this 30-minute swing structure. And what I can now mark off is a valid high here in the market to this low as a valid low on our 30 minutes. That gives me that current swing structure on a 30-minute. Now, as well as this, I can start looking to mark off internal structure. So let's just go forward a few candles and I'll start showing you what's happening here. So we'll mark this off as a internal structure. And what we're looking for now is price to show us that shift in movement. So currently we've gone bearish. Now you can see that we created a close down here. The market created a close up. So we continue to push lower. We created a drop down, a new close up. So look, from this point, we can start reading that internal structure. So the market's now pushed back up. So for a breakout now, I'm looking for this high to be broken through. So we just swept that high at the moment. So you can see how we read the structure. Now the market breaks back bullish. So now we're back bullish. Let's just mark this out. We have a new low we can mark here. So you can start to see that we're heading back towards that area of supply in the 4-hour and heading towards a higher area in that 30-minute swing. We continue to follow the structure. And now we've dropped back through. So you can see we've broken back bearish. So once we've broken back bearish, this becomes my new high. So what I'm looking for is a move now to push back through into this area to then look for sell back down. And that's how we're using that internal structure here. So just continue forward to see how price moves. And there we go. We've now pushed through the high into this area above, and what I like to see is we have a new low here created. So what do we have at the moment? At the moment we have, and I can draw this out to show you, is a valid area of demand on a 30-minute there. So let me just mark this off as an area of demand on a 30-minute. Now this is internal demand, so let me just change it so we don't get confused with the concepts. And that's showing me the internal structure. So that's my swing move on this time frame. Remember, on a higher time frame of a daily, we're on a potential pullback. On a 4-hour time frame, we are making a pullback. We broke structure that we saw back here. This is the break of structure we saw on a 4-hour. That's your new swing move on a 30-minute time frame, and this is our internal pullback phase. So what I'm seeing is that price is currently broke structure. We've gone into that 4-hour era of supply again. Now potentially what we're looking for is price to continue higher. We could go up to this high, but we've just created that high there. So I'm going to mark this off as a liquidity area to be run in the market. So we mark that off as a liquidity area. So what we can see here is price wants to run this area of liquidity. Let's make that a bit bigger. So from this point, I can look for price to want to run up to this area. But what I need to see is a new low created here inside this area. Now, if I get this, I'm going to use this line to show you exactly what I mean. Now, at this point, I'm still bullish. So I'm not looking for sales at the moment in the internal structure. I'm still looking for potential buys. But I want to see price running towards these highs one more time because we've broken bullish, pulled back, left this high as liquidity into an area here potentially. And I want to see price now running a low. So I need to see another bullish move to come back lower. So at the moment, I'll keep following price. I want to see a push out of this area. So we have the first push, and now I have a valid low. Now what I can do here is understand this is now potential liquidity. So if we push up, we continue to run up to that high. Yeah, that's the move on this movement, and we continue to look for price to then reverse. But if we push up and then pull back towards this level, I can now look for a short-term trade going with this direction. So I'd be looking for price to want to run liquidity. But let's just go forward and see the direction that we're moving. So remember, at this point in time, we are within an internal range from here to here. That's reading the internal structure. We went from here, okay, to this high. We pulled back. We went bullish. We swept the low. We swept the high. We went bearish. This high became an area of liquidity to be run. So that's what I'm looking at. We run the liquidity into the area here above. And that's key, reading your internal structure. Now we're holding at this area of demand. If we make a new high, we can pull back. That's a good area to enter to run liquidity, to potentially hold at this area or to run this high before we see a reversal. And lots of dots on there, I know. Now, this is getting too confusing. Please let me know, because obviously I do teach this in much more depth, step by step inside the 90-day, where I do go through and I can answer all your questions on anything you get stuck on. But if you are still getting stuck on this, if it's too complex right now, I will back it off. We'll go through things more simplified for you, but do let me know in the comments and tell me if it's too complex for you. So if I go from here, let's go forward a few candles. If we create a high, which we've just created a high, I can now look for a potential buy to run this level. So if we pull back into this area, I can look for a buy to here and potential target there. Let's just see if we do. So we've pushed up higher, we swept that high. That means we could pull back. Let's go candle and we're making that pullback. Now we've made that sweep, I can look for this for potential first target high. So I'll be looking for price to, from this area, run for here just over 3R and run for here for a 6R trade. Now the reason the entry's there is because we're looking to run this low for liquidity. And again, that's too complex. I won't go into that right now. But let's just go see if we do run into it. So we do. We run into the area. We started moving away. So I want to see price now heading towards this area where I can get out risk-free in the trade. And this is understanding your internal structure. So we do run that area. Great. So now we're risk-free on this trade. We can't lose anything. Now we're watching at this level. That's where I expect price to run for liquidity next. Using liquidity with internal structures. Okay, so we run liquidity in internal structures. That's great to see. Now we've run that area. What I've just seen as well here is a sweep on this time frame again, potentially holding, and we could now see a run lower. So that's just understanding that internal structure. But what we can do even more, let's drop down to a 5 minute here and see what's happening. So on a 5 minute time frame, we're reading that movement in structure. Now I can read here with a 5 minute breakout. Let me mark this off to show you quickly a 5 minute break of structure. I can mark that sweep I just showed you on the high time frame as a 5 minute break of structure. How do we read our structure? Simple. We look for, after the break, the last close down, last close down. new break of structure. What has price just done? Shows me that price is shifted out bearish. So even though we're still bullish on that internal structure on the 30 minutes, that we got that trade to the upside, we can now start looking for sells out of this higher time frame area on a 4 hour, because the 4 hour structure is bearish. We're looking for continuation lower. And that means as we're seeing this shifting out bearish, I'm happy to start looking for trades here. So we could look for a sell here. In fact, from this last move. Okay, so you can see where we see the drop out. I'm happy to look for a sell from here. If I'm selling here, I'm going to want to take a trade, stop at the high, and I'll be looking to get out first target around this low, just to take the risk off that trade. And then potentially we can look to hold this one all the way down to here. That's how we can look at a 5 minute there. Now this is higher risk because we are still, okay, bullish on the internal structure on the 30 minute, but we are coming out of that area on a 4 hour, understanding the 4 hour structure. Let's just fast forward and see how this works. So instantly we have a reaction out of that area of supply, looking for price to run this low to take the risk off a trade. Let's see if it happens. We've come back higher. Again, what just happened there is that we swept this high for liquidity. Now, what is that showing me? That's showing me a new low is created right here on the structure. So we've got a break of structure, pullback, sweep of liquidity, of internal liquidity again. That's our internal. Why? Because we see the close down. This becomes a level of internal structure on a 5 minute. So that's how you start reading your structures on internal and swing structure. And from here, we're risk-free. We let the trade run and see where it goes. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. Let's just play this one out and see where the market goes. So now we'll continue to push down. That's a great sign because we now jump up to our 30-minute time frame. We can now see that from this area, we have now shifted that structure. Internal structure has now gone bearish. So we saw the market sweeping this level of liquidity into something here on a lower time frame. We've then had a 5 minute shift of structure to take a trade, and that's just plummeted all the way down, coming from a 4 hour time frame back up to the 4 hour time frame, and this will all make sense. There is our break of structure, area of potential supply on a 4 hour. So this was that area of internal movement on the 4 hour, and that's where prices come back into that 4 hour internal. Let's drop back down to that 5 minute, and let's just back off. Okay, we'll take all that off, and then we'll just run the rest of this so you can see how it plays out. Now, this may be in hindsight, and yes, I do not happen ahead of time because this is a trade that I was looking at taking. So that's why I understand what was happening here. Now, we take full profit target, and that is understanding the use of internal structure, of internal liquidity within your swing structures. And that's how you read every move on the chart. When you start reading from a higher time frame, smart money structure, applying the concept gives you full clarity, and that's how you can become profitable using structure in the market. You do need to combine liquidity, supply and demand zones to do this correctly. And all of that is what you can learn more inside the 90-day program. Now, if you want to learn how I use the two time frames in more depth, you can check that out even on this next video coming up, where I cover two time frames using the multiple time frame structure.